Expected to reduce interest rates by at least 25 basis points this afternoon when it makes its announcement on monetary policy. Economists say while monetary policy is not a solution to long-term economic growth challenges, a cut in interest rates can provide short-term relief for strained South African businesses and consumers. The weak economic performance, as well as the depressed investor and consumer confidence levels, remain a major concern. Consumer price inflation is in control and well within the Reserve Bank's target bracket of 3 to 6%. The May CPI 4.5% number, up from 4.4% in April. In the previous sitting, the Reserve Bank revised downward economic growth forecast for this year from 1.3% to 1%. PwC economist Lulu Krugell believes this will further be revised downwards. She says a resilient rand seen in recent weeks, supported by the US Federal Reserve and European Central Bank hinting at rate cuts, provides the Reserve Bank with sufficient room to ease monetary policy. Well, for more on this story, my colleague Arabile Gumede joins us, and of course he does keep a close eye on what's happening with monetary policy situations. Welcome, sir.
Thank you so much, Nompo.
Good stuff. So the market largely expects a 25 basis point cut this afternoon. What's informing that?
Yeah, I think a lot of it is really just, the first sentiment is, let's just be honest, inflation has remained within the target bracket since actually April 2017, if that's the actual truth, right? The target band between 3 and 6%. It has remained near the midpoint for the last 10 months. It hasn't breached 5%. Since at least last year, November. All right, so again, it really tells you the sentiment around how things are remaining contained. It isn't necessarily with regards to demand pressure, so it's not that consumers are demanding things and that's why inflation is perhaps staying where it is, but it's a lot more just with regards to, I suppose, supply. We're getting a whole lot of goods, but nobody actually wants it. So there's reduced demand pressure, really, and that's why inflation is remaining at the levels it's at. And if that is their primary mandate, of course, then it does mean that a cut needs to definitely happen. I do have my views about how perhaps it's also late for it, but better now than never.
Exactly, than never.
Yeah.
Look, South African consumers and business need a break because the economy is in such dire straits. Do you think that on its own would be sufficient to inform the Reserve Bank to cut rates? Because at the end of the day, it needs to play its part, even though, like you say, it's not the only game in town. We need to look at things like fiscal policy as well. Yeah,
I can tell you one thing for sure is that the Reserve Bank governor will not say in outright words that it is his duty to help growth. His duty, as mandated by the South African Reserve Bank Act, is to act in the interest of the currency and ensure that nothing spirals out of control in that regard, right? So, of course, they won't necessarily speak to that, but I think this is the opportune time where it makes perfect sense to do so, right? To cut interest rates. In my point of view, however, I do think that a 25 basis point cut only reverses the 25 basis point hike that they had in November last year. Now, the reason they hiked interest rates in November last year was a lot of that was the supposition that the world was turning to higher interest rates, that things were perhaps going to start looking better in some way, and you needed to then mitigate inflationary risks that were perhaps on the way. But that doesn't seem to have come through clearly. So they preempted something that didn't happen anywhere else in the world. And so now they're only reversing that back. If, in my point of view, there should actually be a 50 basis point cut to reverse that and to then, speak of the consequences we've had thus far since. And I think, a whole lot of things. Yes, petrol prices may have increased, but other things certainly haven't increased the way you'd certainly have thought. I really reckon that, yes, it is time to give consumers and businesses a break. Little too late, but as we said, worthwhile having it.
Like you say, the Reserve Bank governor won't explicitly tell us certain things, but to what extent do you think the fact that, the European Central Bank and the US Federal Reserve are hinting that indeed they're going to be easing monetary policy, to what extent do you think that will also assist the Reserve Bank in cutting us some slack and giving us a rate cut?
I think definitely. Look, they won't admit to it, but in November last year, they looked a lot at what Jerome Powell, the Federal Reserve Chair, or the governor essentially of the Federal Reserve in the United States, said with regards to interest rates, and said that perhaps they're moving towards higher interest rates. And because they preempted, it meant that they were ahead of the curve in many ways. And yes, it looked good for the currency, it looked good for deposits because a lot more people saw us as a little bit more attractive. But overall, it's the same sort of areas have or the same sort of people, Jerome Powell and the European central banks and even South Korea today unexpectedly cutting interest rates. All of that just shows you that we preempted things, we moved in the opposite direction, and now it is time to go in that direction. But again, we're behind the curve now in a way, right? So cutting now just means that we've matched up to the rest of the world, and we probably need to do it again. So perhaps another cut in 2019 is also possible, and you're quite right. The sentiment around the world looking to cut certainly does help us.
Very quickly, Arabile, this afternoon you're going to be hosting our special MPC show. Who have we got in studio?
Yeah, we've got Gwako from ABSA as well, joining us as well. New guest really with regards to that. We've also got Nikki Weimar from Nedbank who will be joining us as well this afternoon to unpack that, and we'll get the latest really with regards to that. And from 3 to 4 p.m. we'll engage with exactly what comes out of that decision.
Super. Thanks very much, Arabile, for that. My colleague Arabile Gumede, he'll have that special for you, like he says, from 3 p.m. We're going to go for a